Hello and welcome to another episode of the Investor Financing Podcast. And I'm bringing more value today. And I think today's guest is going to do a really good job of showing you a path to real estate. He's done a little bit of everything, which I like. I like his model. We were just talking before we went live here on recording. And he not only invests internationally with short-term vacation rentals. He's located in Florida. He owns a real estate brokerage, property management company. He buys in Florida, obviously, internationally in the Bahamas and in the Midwest. And he's running his management from Florida in the Midwest. So he's utilizing technology. And I think he's going to provide a lot of value today for people. Because I think when we dive into his story, how he got started, in 2008-9 when he got started in real estate, it sounds like, which was a great time. He was probably buying a lot of foreclosures, my guess, and really kind of scaled his business quickly because he got in at a good time. And now he's progressed his business where it's like a machine. So we're going to dive in. Welcome, Carlos Rovira. And Carlos is a professional accredited investor that has been purchasing and managing income-producing property since 2009. He has experience in purchasing, syndicating, and managing both commercial and residential properties throughout South Florida, the Midwest, and the Caribbean. Carlos spent 10 years as an engineer working in the tech industry. He prides himself in being able to apply the same principles from the tech world into the real estate industry by creating systems and processes. Guys, take note of that. Every successful person, systems and processes, right? That's the one thing I'm lacking. That unlock opportunities and cash flows, maximizing returns. His data-driven analytical approach to underwriting and managing properties is a competitive advantage that he believes he has as an operator, and are proud to be able to share it with other investors and owners. He's a licensed real estate broker and is active in both property management, syndication, brokerage activities throughout South Florida and the Midwest. His current holdings include several multifamily properties in South Florida, a portfolio of residential and commercial properties in the Midwest, as well as a short-term vacation rentals in the Bahamas. He also manages a significant portfolio of properties for third-party investors. That is amazing. So you do a lot, and I love bringing on guests like yourself. So welcome to the show. How are you doing today?
What's up, Beau? How are you? I'm good.
All right, cool. So walk us back to, so obviously you're a smart guy. You have a bachelor's degree in software engineering. And I see a lot of correlations with people that have like tech and engineering degrees. They end up becoming, not all of them, but the majority of them. A lot of my friends that are in engineering backgrounds do really well in real estate investing. And I think what I was reading in your bio, it comes down to systems and processes, which I think is a good talking point about today. But why don't you walk us back to, like, you transitioned from your tech career. How did you get into real estate? What was like the initial investments that you were making?
I think when we all, like those of us that end up working in like a technical field, we go in with like a certain expectation of our stability, our financial stability. And then when real life hits us, it sort of is an awakening. In my case, I went to college and I studied software engineering. I thought I was doing the right thing, going after a job, a 9-to-5 job. Worked at Yahoo right after graduation, old internet company. And I thought I was doing the right thing. I had finished my degree, had a job on Monday right after my graduation, didn't even take any time off, and I was set. But this is 2008. So in 2008, obviously the world ended. The economy crashed, everything crashed, everybody, everything went to hell. And what happened was that at Yahoo, there was a big layoff. So like 6 months into my new job, like basically the whole office gets laid off. And the only reason I didn't get laid off is because I was like the bottom of the barrel, probably the cheapest paid employee. And I worked really hard and I added a lot of value to the organization, so they kept me. My boss got fired. I ended up having to do his work. I didn't get a promotion, so it was a huge kind of a huge kind of a like wake up call where all of a sudden I'm thinking, wow, man, like at any minute I could just get fired. It's, it's done. So that was kind of an existential moment for me that I never really anticipated, because I was thinking, okay, I'll just work here for the rest of my life and I'll have my 401k and it'll be good and I'll get promoted. And, it's not the case. So, started reading a bunch of books. I'll throw in the cliche that I read Rich Dad, Poor Dad, which my economics teacher in high school had actually recommended. So Charlie Cleveland, if you're listening to this, if you ever hear it, thank you for that. He was very adamant when we were in 12th grade to read Rich Dad Poor Dad. Of course, as a high school student, I didn't read it. I read it when I was 23, working at Yahoo, which was perfect because it was the right time, or it was right after that, that layoff. And that book is very, very entrepreneurial, very, very, very different from the way we're brought up in this country, which is, hey, go to school, get a job, and you're done. So that led me to other books. Basically read the entire Rich Dad series, whatever I could find, any other real estate book I could find. And I sort of became obsessed with this concept of acquiring rentals that would pay me money, regardless of whether I would work or not, right? So all of a sudden, this new idea of like, okay, I can have this income that I don't need to work for, kind of pops in my head, which I had never thought of. So I'm reading more, and again, I'm an engineer, so I'm very analytical. I read more. And it's 2009. I was engaged with my current wife, and of course, what do you do when you're engaged? When you get married, you buy a house. So I had this crazy idea. So we were looking at houses, and all of a sudden, I get this crazy idea to buy a duplex and live on one side, rent out the other side. This is before the term house hacking was invented. So this is before that. So we, I obviously I proposed this to my fiance, my current wife, and she was like, "Ew, duplex. What? Duplex?" Is in her mind, she's imagining like a duplex, like somewhere in like a really low income neighborhood, where we're gonna have to live, start our lives. Everybody tells me it's a bad idea. It's 2009, right? So anybody who has invested in real estate is a failure in 2009, right?
Right here.
Here you go. So now I'm telling everybody I want to invest in real estate. My mother, everybody was like, no, bad idea. Of course, I didn't listen to anybody. Any of those people. We found a duplex. I finally got my wife on board to jump on that. We found a duplex that was in a nice neighborhood. This neighborhood called Pinecrest here in Miami, which is an upscale neighborhood that still had a few little pockets of multifamily in it. So we found a duplex. We bought it. It was one of the most difficult closings. I mean, this is 2009 when no bank is lending. I have a job that I had for like 6 months, barely have any credit. Like, I had no business buying real estate really at that point. Thank God my aunt, she co-signed for us, helped us buy the loan, helped us buy the property. She loaned us some money for the down payment. And so that was a good blessing there. And so we bought this duplex. We moved in. We fixed it up. My wife and I painted everything. We kind of fixed it up. We rented out the one side, and once we had that cash flow going, then we fixed up our side. And by the time we got married, we were ready, and we moved right in. And we were living for free, basically. I mean, the rent from next door was paying the whole mortgage. We bought it for $395 back then, and this is Miami, where you can't even buy like a shack for less than $1 million nowadays. $395. We bought that duplex. We actually just sold it last month for almost $1 million, $965. And people were telling me not to buy real estate. So that's and obviously I got lucky. Things have gotten expensive now because of COVID and all the changes in the economy. And this was back in 2009 when things were cheap. So, 12 years later, obviously that's great return. But the more important or the better thing for us was that we were basically living for free. So that allowed us to save basically most of our paychecks so that we can buy more. Because once you get a taste of that income, you just want more and more and more, right? So over the course of a couple of years, we bought like maybe, I think it was 1, 2, 3 more duplexes. We had 4 duplexes in Miami by the time it was like 2013, 2014, 2015, around there. And at that point, the market had turned already. I mean, things had gotten expensive. We're out of the recession, and it just became difficult to find cash flowing properties in Miami. Meanwhile, we have all this cash flow, and we're saving up money, but we want to keep the snowball growing, right? Because that's how you really achieve wealth, is you keep the snowball growing and growing and growing. My wife and I are complete cheapskates. Like, we don't spend money on anything. Even till this day, we're like, anytime we have to buy something, we get like guilt. Like, should I buy it? The other day she had to buy a vacuum, and it was like this big thing. $200 for a vacuum. I was like, just buy it. We need the vacuum. So we're really good about living frugally, and we were saving up and saving up. We couldn't find anything. So then I discovered turnkey investing, where basically you go to the Midwest, or you go to a tertiary type market where property is less expensive. And you have these guys that are basically fixing up these distressed properties, putting tenants in place, and then selling them off to a guy like me who lives, in Miami and can't afford to buy anything in his own market. And even though you're paying retail, because you listen in the podcast and everybody's knocking on the turnkey guys, like, oh, you shouldn't buy it because you're going to be overpaying and you're never going to get the returns that you need. But compared to the cash flows I could buy in Miami, it was a no-brainer. So I bought a couple of turnkey houses in Kansas City. My mortgage broker actually recommended me to a turnkey guy in Kansas City, and I bought a house from him as an experiment, to see if it worked. It was 89 grand. Financed it. Came in with like 20 grand. Good cash flow. $300, $400 a month. Okay, this is good. Let me do it again. So I bought a second house, and then I bought a third house, and then a fourth. Little by little, I had a pretty sizable portfolio in Kansas City. That was cash flowing really, really well. And then all of a sudden the property, the market starts to turn again, right? So you need to, in real estate, you always have to be kind of adapting. COVID hits, and my property manager, the deals kind of dry up, right? Because at the beginning of COVID, nobody was doing anything. So really nobody was selling, nobody was buying, nobody was really doing anything. So my turnkey guy kind of fell into a tough spot because he couldn't really find deals. And then the management, the turnkey companies actually manage for you. The management kind of started to go downhill. And maintenance issues start to rack up, and the quality of the tenants that they start putting in starts to go down. It's kind of take their eyes off the ball. And when prices started to go up last year, 2 years ago, this is already still in 2020, it just became impossible for him to continue, because it was hard. It was hard for him to find deals, and then the quality of the management went down. So I started seeing my cash flow really go down, which is a problem. So at that point, I fired him. I told him, look, man, I need to just take control of the portfolio. I was paying like $2,000 or $3,000 a month in management fees, which I could easily just now absorb, like take it and start making that money, and then invest that cash into the systems that I need to create a management company. I got the software, the property management software. I set everything up. It was a tough couple of months to kind of transition people. There was a lot of deferred maintenance. But after a while, you kind of get into like this good groove. And since going back to my software engineering background, like I'm really into systems. So like the property management system, I set it up right away. I created the maintenance, the submission for maintenance issues to go, into the system, and just kind of streamlined everything. It's not that hard to really do a good job when you're actually trying, you actually care at property management. And you got to keep your tenants happy too. Like make sure that you take care of the maintenance issues that do pop up that are out of their control, but also keep them accountable for taking care of the property. So it's more of an art than it is a science, the property management, but it's really not that hard. So it took over the portfolio, and then it's just kind of snowballed from there. I found that it was easy to manage, so I started to kind of market to other owners to manage for them, because I saw the potential for some pretty good recurring income on the property management side. And the business has just kind of grown since then. And then most recently, I partnered up with a friend of mine who, he wasn't a friend, but he was introduced to me by a friend of mine here in Miami, coincidentally, a friend of mine from high school, from elementary school. His sister lives in Kansas City. She goes to school there. and her husband now lives with her in Kansas City. So they're kind of Miami people that moved to Kansas City. And he was really into real estate, and he did his dissertation on Wynwood, which is a neighborhood here in Miami that's just exploded. So he's super into real estate. And so my friend was like, hey, why don't I introduce you to Alfredo, because he's in Kansas City, and you're buying in Kansas City. So he introduced us. We met up. We talked. He came from like a fundraising background, because he worked at the university over there in Kansas City, where he was like raising money for the university. I told him, look, man, you're good at raising money. I'm good at finding and managing properties. Why don't we get together and start buying bigger deals, like start syndicating some deals? And since last year, we've syndicated 3 commercial buildings. So we got 2 office buildings and 1 that's kind of like an office retail building. And that's been good. So we're going to do some more of that this year, hopefully, and just keep growing the portfolio. And that feeds the property management business, gets fed by that. And then I'm also buying duplexes and stuff in Kansas City for the personal portfolio, and then growing the third party management. And that's where we're at today.
What do you like about Kansas City? I don't really know much about the market other than I know, several investors that are buying there. Seems like it's got good job growth, so forth. What do you really like about the market? I mean, obviously cash flow is probably pretty good.
Yeah, cash flow is very good. Like you said, there's growth. There's economic growth. I think there's been kind of a migration now as a result of COVID. People leaving states like California and New York have like these very high restrictions, like very expensive places to live, and they now have all these restrictions, and people are kind of frustrated. So you're seeing a lot of movement. So the population is actually growing by like 1% a year, which is pretty damn good. And the cash flow is still good. And it's easy. It's so much easier to do business in the Midwest. Like, everybody's nice. People do what they say they're gonna do. Here in Miami, it's like every time I turn my head, I'm getting backstabbed. I feel like I'm getting backstabbed by somebody, and it's just very high anxiety, high competition. We're talking about big money, coming in and out of the city. So naturally, there's going to be a lot more competition. So the Midwest markets are still kind of sleepy, and not as developed as like the coastal markets from a real estate perspective. So it's still easier to do business, less regulation, things are cheaper, closing costs are cheaper, lender fees are cheaper, everything is just easier and smoother. So it's just, I can do a lot more volume because it's so much easier to do business than to do one deal here in Miami. It would take me like the amount of effort to do 5 deals in Kansas City, and I would take like 5 years off my life and stress and anxiety. So, continuing in the Midwest is definitely attractive still for me.
Yeah, and I agree with that 100%. And I think the one thing I was lacking in my portfolio is like maybe if I get enough properties in a certain market there, is to think about developing your own property management systems, because you're right. Like when I listened to you say at the time you had 15 or so properties, and you could keep the 2 or 3 grand in property management fees, use that for your systems, right? Like, it's because you're saving that 2 or 3 grand. And I guess the key is if your systems are automated enough and using technology, and you're collecting fees via ACH or whatever, so you're not going and knocking on doors to collect rents. And I think the sticky point that I would see is that you need a really good maintenance person. So when you get a service request, they go out. But that's where I spend a lot of money with my property managers, because when they use their internal people, right, that's where you kind of sometimes, like, there was a couch left in front of one of my fourplexes, and it was not even a couch, it was like a little chair thing. And of course, code enforcement came. I paid $100 to get it removed, right? Like, it's just, that kind of eats you up a little bit when you get those kind of things. So I could see doing that. How are you finding your deals now? Are you doing any because of Miami's market being so expensive? It sounds like you're more focused in your Midwest, just because like everything is a lot easier to do. So are you sourcing off-market deals? You have wholesalers there, or how do you kind of find your deals that come to you?
Yeah. I'm basically focused now on the Midwest, just because I can do a lot more volume. Alfredo, my partner, he lives there, so he kind of is the one that meets with the brokers. We call it beers with brokers. He'll invite brokers out to beers and kind of keep those relationships so we can get the off-market deals flowing. Then that's on the commercial side. On the smaller side, the small multifamilies that I'm buying for our personal portfolio, which are duplexes, small single family homes. I have a realtor that sends me deals. She's awesome. Sherry, she's amazing. I'm gonna drop her name, Sherry Oaks with Reese Nichols, Kansas City. She's the best realtor. She will send you deals. She will fight for you. She's smart. Okay, she's not lazy. She's not scared she's not scared to work. I mean, she'll get up at 5 a.m. to see what's up on the MLS. And like, I'll get up at 6 a.m. and I have emails from Sherry already with like the latest deals. You can still find deals on the MLS in Kansas City. You just got to be really fast. Like, you have to submit the offer that same day for full price, cash, done. But they pop up. And then on the commercial side, I'm still finding deals on LoopNet. Believe it or not, in Miami, I don't even open LoopNet. But in Kansas City, there's still some deals to be had on that are on market. The better deals are definitely off market. I have another partner. His name is Jake. He has like this virtual assistant on like an auto dialer, and then we give him like lists of. So we'll like canvas an area with with different properties, and then we pull the different names of the owners from CoStar and various places. And then we just have the VA and an auto dialer trying to, just like the wholesalers do, trying to source deals like that. Not as much volume as the wholesalers do it, but we get 1, 2, 3 deals, every couple of months off of that, which works. So just, different things. Deal flow is definitely the hardest thing now, just because things have gotten expensive everywhere with inflation, and everybody's investing in real estate now, especially multifamily and residential. But yeah, I mean, I got on market with Sherry. I got on market with LoopNet, beers with brokers. Alfredo takes them out and just keeps them happy, so that when they do have a deal, they send it to us. And then we got the VA on the auto dialer. That tends to keep us busy for now. I wouldn't say I'm drowning in deals. I definitely could do better. We could be doing better at sourcing deals, but we're doing whatever we can.
Yeah, that's good. I had kind of like a premonition. I don't know if premonition is the word, but like, I just thought about it and I said, listen, I think that the easiest, best investment are duplexes. If they have separate meters, usually, if they're separately metered. The reason my thought process of this, and I kind of like, everybody goes and says, oh, I want to, buy a 100-unit multifamily property and, do a big syndication. But I like the ease of a duplex. Like, you just can quickly pencil it out. Is it a cash flowing asset? How the mechanicals, how the roof, what kind of capital expenditure you're going to have on it. But my real thought process at the end of the day is that, let's face it, the cost of housing over the next 20 years is going to be ridiculous, and the cost of rent is going to be ridiculous. So when I go to sell my duplexes, who's going to buy it? First time home buyer, and do exactly what you did, right? And now that house hacking is getting so popular, I just think that's like, to me, that I just like thought about it, and it's so basic, but I'm like, duplexes are like the way to go. Like, you can get FHA financing for a first time home buyer. So I have a simple system. I put it in this little app. I see what the cash on cash return is, plug in the financing, and I don't, I can buy retail as long as it cash flows. So yes, can I do BRRRR stuff where you go in and rehab it, and then that's more labor intensive. But I think I love how you built your business, and I think, like, if anybody's listening that hasn't started to build their business and wants to build their business, you should take a note. Like, it's not, you have to take your baby steps, right? Like, the first baby step you took was buying that first duplex, and that propelled you. You bought something for $399, just sold it for $1 million over 12 years. Where are you ever going to have a forced savings account like that? I mean, it's hard for me. I'm not frugal. I'm probably not good with my money. As far as if it's in my bank account, I have like all these, but when I put a down payment down on a house, it's gone, right? Like you forget about it, it's gone. And so that's what I love about real estate. And I think like if you're buying $100,000 duplexes or $150,000 duplexes, 30 grand down payment, buy cash flow, rinse and repeat. How many times in a year can you do that? That's what it's not rocket science, just systematic and then building processes. And that's what you did really well. Let's kind of jump in real quick. How'd you get your vacation rental in the Bahamas?
Yeah. Okay, so it's this island that nobody's ever heard of. It's called Great Harbor Key. It's in the Berry Islands, very small island. My family's been vacationing there for years. My aunt and uncle, my uncle basically grew up going to that island, and then they owned a property, like a vacation property that they would just go to, that they would just use for personal purposes for like 20 years. And so I've just known the island. I've been going there, on vacation since I was younger. And the vacation rental market there is very limited. Like there's not much. If you want to go to Great Harbor, there's really not a lot of places to stay, and there's no hotel, right? It's not like Nassau where you've got, Atlantis. It's a really small island. There's no hotel. It's mostly private homeowners that have built houses and then they, use them as vacation houses. So I knew the island. I knew this specific complex, the beach villas, which is where we own. We have 2 units there, and my aunt and uncle owned a beach villa, so I knew that area because we had been going there for years. And then they built a house, and his brother, my uncle's brother, also bought a house. So my uncle and his family all owned in the same complex, and then they started buying and building houses. So they started selling off their units. So I bought one of them from my uncle's brother and turned it into an Airbnb. We were doing well. I will say it's been very tough with COVID. We bought it in 2019 and it was awesome. I mean, we were making really good money. Just because there was so little supply, right? Like if you want to go to Great Harbor, there were like 3 rentals, one of which was ours. And we had like basically for 2020, we had like almost like until 4th of July. Starting in January, we have almost fully booked till like 4th of July area. And then COVID just like killed it. Border shut down, everything stopped. And it was real bad for a while. And by then we had bought a second unit. So we were like, oh, we're doing so well with the first unit. Let's buy the second unit. So we had the second unit and then COVID shut us down. We were like 0 income for a while because it wasn't like here in the US where things kind of opened up quickly. And then the Airbnb guys started making a killing again. The Bahamas has taken really long to kind of go back to normal. And now they have like testing requirements to go in. And you got to get tested on the 5th day. And so I think that kind of deters people from coming. I think governments around the world that have put these restrictions have really destroyed their tourism just because the confusion alone of like, oh, am I going to have to get tested? What's going to happen? Kind of deters people from going. So the volume of rentals has gone down significantly. It's picked up quite a bit now in 2022. So we got a good docket of rentals in the next couple of months. But 2020 was horrible. We took advantage of that and we actually went to the Bahamas and stayed in our unit for like 3 months in the middle of COVID. So like June to like September of 2020, we were there the whole time. And just we worked out of there. And then my kids actually started doing school, like online school from the Bahamas. So that was pretty cool. And then we came back and, things start to open up and have gone back to normal, but it's not as good as it was before COVID because we were like it was just new bookings and new bookings and new bookings. It was great. That's still pretty good cash flow. Like we're keeping it for now.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau Eckstein, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. What has been your biggest learning lesson in real estate? Like a deal that's gone sideways, that you might have had to salvage, What is something that really taught you a lesson in real estate? And even at the time, it might have been really bad, but you gained a lot of value out of it.
Yeah, I mean, buying internationally, you need to be very careful because the governments can change. It's in the US, it's different because the government doesn't change as quickly. But in other countries, especially the third world countries, man, the political situation can shift very quickly, and then you completely lose control, and you're a foreigner, and so that's a factor. Having gone through COVID with the short-term rentals, I think has given me second thoughts about my international strategy, because I wanted to buy a place in Madrid because we love going to Europe and do the vacation rental there, and then I have kind of like this vision of just having a bunch of vacation rentals all over the world of places that I love going to, just so I can visit them. Definitely I've scaled back on that. On the long-term rental side, the turnkey model, you just need to be very careful. I did end up buying a couple of houses from a different turnkey provider who kind of screwed me over. Like one of them, once we closed it, the tenant had moved out and like trashed the place. So I went on Bigger Pockets and I wrote a really bad review on the guy, and he saw it and he was like, all right, I'll buy back the house. And he bought the house back in exchange for me writing in Bigger Pockets that I would buy that he had made good. So just be careful if you're buying turnkey, just make sure you vet them, and that before you close, you make sure that what you're getting is what you're getting. So that's another thing. So my two worst deals, not counting the issues we've had with COVID in the Bahamas, my two worst deals were two turnkey deals. One of which was where the guy bought it back, and then the other one, the tenant was just horrible, and there were all these maintenance issues that didn't come up on the report. And it was just a house that was like in a good area, but like right on the edge where there was like a housing project, and it was like really hard to keep it rented. So like we would get new tenants, and then they would just leave because like they thought they were getting a specific neighborhood, and then they were like on like the fringe of the neighborhood. That one kept us busy. 1401 Priscilla Avenue. I'll never forget the address. I finally sold it to a wholesaler. Poor guy. He'll never know what he bought. And I feel like I sold it for a little bit more than what I paid for it. So I kind of made a profit on that house, even though it sucked.
Yeah.
But I think over the course of like the 3 years that I owned it, we did lose a lot of money on vacancy. So probably at the end of the day, I lost money on that deal. But still, I was able to get out of it without having to like take a loss on the.
Yeah.
And that's the power of real estate, man. If you hold on to it long enough, it's hard to kind of fail,
Yeah, I was going to say the same thing. If you work your issues out, it's very forgiving. Yeah. But you got to understand that going in, that there could be a couple of years of pain you get some thorns in your sides with some of these properties. And anybody that says they've never had a loss or never had problems, in real estate, run from them, because if you own enough real estate, you're going to have to deal with issues no matter what. Yeah. And you just got to kind of learn how to deal with it without it stressing you out. Now we're kind of coming up on our time. I don't want to take all day. I know you're busy. So what tools, apps can you not live without that you use that might help your business in some way or fashion?
Well, we use Buildium. That's our property management software. I would be, dead in the ground if we didn't use some sort of property management software, because it automates basically everything. We're actually now we're going to switch now to AppFolio, because they have a whole like other program for syndicators called investment management. So we're going to switch to that. That is the number one tool I cannot live without. I do have a separate system for my phone. So like tenants never get my cell phone number. That's number one advice I can give to anybody is never give your cell phone number to the tenants, because they'll abuse it. They'll call you in the middle of the night, they'll text you, and I'm the type of person that if I see a problem, I feel like I need to fix it right away. So if I get a text at 10 p.m., even if it's something stupid, it affects me, right? And then I get anxious. And so I have a phone system now that between 9 and 5, it forwards to my cell phone, but it's a separate phone number. And at 5 o'clock, it goes straight to voicemail. So if it's an emergency, call 911 or send a text. So I can actually receive text messages through the app of the phone number. And so if it is a real emergency, they'll send a text, but I won't get a call. That's been amazing because, man, my phone ringing all day long, that was driving me crazy. And then now we have a virtual assistant that picks up the phone for us. So I don't even have to pay attention to it. But that was a great tool that if I had been dealing with just my cell phone, when I was doing it with just my cell phone, crazy.
Are you looking at any other Midwest markets to expand? Or are you pretty happy just kind of growing what you have now because you have the systems there?
Right now we're focused on Kansas City. My partner, he's big on, for some reason he has it in his head that he likes Bentonville, Arkansas, where Walmart is. But I'm trying to stay focused and not, because I can fall into like shiny object syndrome also, and like end up doing a million different things and not really getting good at any one thing. I keep telling him like, let's just get really good at Kansas City, and then once we've like completely tapped out and can't really, grow anymore in there, then we can go on to other markets. But to go into a new market, we have to find a new maintenance guy, like manager, new realtors, new brokers, new everything. Like we'd be starting from scratch when we're doing just fine in Kansas City. So for now, I'm trying to stay focused on Kansas City.
Very good. Well, that was a really great interview and you shared a lot of nuggets. So I really appreciate it. If somebody's interested in investing in Kansas City, do you have like a website they could visit?
Yeah, so the syndication business is RG Capital Partners. So the website is rgcappartners.com. It's the only domain that was available. rgcappartners.com. And then my Rovira Realty is is the property management company. It's my brokerage and the PM company. That's rovirarealty.com. ROVIRA realty.com. Those are the two websites.
Very good. We'll put them in the show notes. Well, everyone, I hope you enjoyed this episode. I certainly did, and it kind of reinforces my investing strategy. So I always like that my vision of the duplex is the way to go. But anyway, we'll see you on the next episode. Please like and subscribe and share with your colleagues. We'll see you later.
Awesome. Thanks, Beau.